Good morning, folks, and welcome back to Almus Market Mornings. It's one of those quiet days in the markets. We have previously discussed on the events in Japan and France, both politics leading the moves, which seems to be continuing. Yen is past the 152 mark. Euro trades close to 1.16. Gold is at record highs. It has sort of made a high of 4,001 as we record this. And let's move to JK. JK, how are we reading the current set of moves? And your thoughts on the gold prices, because there seems to be no respite whatsoever in gold prices. So, how are you reading these moves?
Good morning, Swaraj. Yeah, I think gold prices, of course, while it has already moved a lot this year, more than 50%, market is still finding reasons to buy it more. We are having political challenges in Europe. We are having shutdown in the US, and not enough data for market to digest and take a view. Stock markets are also at very high levels. The AI related investments, even yesterday some big deal has been announced by Google, and so I think market is a bit skeptical about the current state of the other markets. So they're uh, actually looking at gold as a safe haven buy. But that said, I think it's very difficult to see how far it will go from here purely on technical ground, not on fundamental ground. So that could be a retracement that we should look for. But I mean, if you look at the currency market itself, it's got quite a bit of momentum now for the dollar. And there was a commentary which said that US dollar is the cleanest of all the dirty shirts right now. So dollar is being bought. Just for a perspective, dollar in last week was trading, mid of last week was trading at 146. Today we are above 152. And even as you finished your notes in the morning, euro has also broken down towards 1.16. So we are now seeing some momentum, and we have been used to low momentum and slow moving market, but suddenly we are seeing some momentum there, and dollar is definitely gaining, and we are testing the key resistance for the dollar index at 98.80 and through 99, and my target is above 100. And we are having good reasons apart from technical positioning in the market. We have good reasons for it to be seen. Yes, of course, while we didn't have too much of officially released economic data, we had some private reports once again. Inflation expectations by consumers, which has been released by private institution, has seen inch up to 3.4% from 3.2% for 1 year. And for the 3 year period also, it has gone up by 0.1%, that is from 2.9 to 3%. Then consumer sentiment data, which is also the economic optimism index published by the the TIP organization. That is the first monthly read on US consumer confidence that has slipped from 48.7 to 48.3. But at the same time, the economic outlook has also seen a drop of 5.9 percent from 45.5 to 42.8. So quite a bit of drop in the consumer sentiment. Of course, this is the private survey. We will also have Michigan University survey in the coming days. Um, then quite a few Fed members were also speaking yesterday in the absence of economic data. What they say have been taken note of by the market. One of the members, Mr. Kashkari, said it's too early to tell if the inflation will persist due to tariffs. So there is uncertainty on the view on the inflation impact on the economy also. We also have had Stephen Miran, who spoke about Fed has to be forward-looking rather than relying on the available data, and the forward-looking prospect is not so good. So there should be larger rate cuts. So these are the few members. But then we'll have a very deep insight into the individual members' views when Fed meetings are published tonight. This will be published despite the U.S. government shutdown. So this is at 11:30 p.m. India time. This can give some more insight into the individual members' thinking on the economic prospects, on the employment situation, and also perhaps on the neutral rate discussion that has been, much talked about in the recent time. Meantime, the shutdown has entered the second week today. It started on 1st October, and yes, it's not looking so great. A survey says that at least for one more week it can continue. Uh, the possible that some layoffs will start. Um, worrying thing is that even the key areas like the air traffic control in major towns are seeing some staff shortage. So there are delays in flights. So these, some eventually this is going to have some impact on the economic activity, definitely. So it's not as you can say some passing thing as many people assumed, and it's going to have some impact going forward. Meantime, the World Bank also has published its forecast. Mainly for China, it has slightly upgraded the growth. For India, for FY26, it has maintained at 6.5%, but for FY27, it has downgraded growth by 20 basis, sorry, 0.2%, from 6.5 to 6.3. This happened even as the RBI has published its own forecast at 6.8% for FY26. World Bank is saying that India has to go for much, much larger reforms because it is so as to increase the domestic production and employment, because it will take some time to overcome the global challenges that it is currently facing as well. As I said, we will see the FOMC meeting tonight, meeting minutes tonight. Chairman Powell will also speak tomorrow. His remarks in the absence of other economic data, and the changing view of the Fed on the economy also will be looked forward to very closely. On the rupee, we have had a very narrow range yesterday once again. Small inflow from FIS was seen yesterday, but that could be including the IPO related inflow. So did not see much of an impact on the spot rate as such. But I think two things I'm taking note of as far as the rupee is concerned. One is the renewed strength in the dollar, which is now pushing towards 99 and perhaps towards 100. And secondly, the narrow ranges seen in the past, similarly for trading in 4 paisa, 5 paisa range entire day, along with the fact that the option, the implied options level has dropped to the level that was last seen in 2 years back at 3.11%. And this has come down from around the 5 point odd that was seen after the terrorist attack in Jammu and Kashmir, and also the Trump tariffs, etc. Now, with the low volatility, or rather volatility dropping to low, and the range is getting very narrow. Going by previous behavior, I think we are in for some sudden burst of movement. And this could, if you correlate it with the dollar movement that has been on the upside, I would tend to think that we are going to see some more weakness on the rupee. And as I have shared yesterday, also despite the inflows that were, perhaps seen in view of the large IPOs that we are seeing, the rate has not moved much, even below 88 to 70. Brace yourself up for some volatility, and further volatility in the rupee, triggered by the dollar index movement, as well as perhaps the kind of risk-off sentiment that is slowly creeping in, because yesterday even the US stock market was taking note of the shutdown and its impact perhaps on the economy. A lot of positives having been discounted. So I think we are in for some larger movement in the currencies.
Thank you, Jackie. And I think the theme continues. We are expecting some strength in the dollar index. We are seeing, and I really like the quote which you said at the beginning, that the US dollar is the cleanest of all the dirty shirts. I think that's a great quote, and that's the kind of moves we are seeing now. Dollar is picking up some momentum. Euro has, of course, fallen to its key levels at 1.16. Gold prices continue to rally. It's moving in its own factors. You have the government shutdown, the political turmoil in other regions. All of this keeping the gold elevated, and even so, the lofty valuations in the AI sector that's going on, deal after deal, and numbers in hundreds of billion dollars being thrown around. So that's the kind of environment we are in when it comes to the key things to look out for today would be the FOMC minutes that's going to be released around 11:30 p.m. India time. And of course, we have the Fed Chair Powell's speech tomorrow to look forward to. When it comes to rupee, one important thing is that the implied options volatility has dropped to levels seen 2 years back due to the narrow ranges we are seeing. As JK mentioned, usually these kind of narrow ranges and drop in volatility, along with the strength in dollar index, that actually might favor another bout of rupee weakness. So that can really blow up the volatility. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.